Welcome to Blockchain Tech and Finance with me, your host. If you're on the YouTube side, please do subscribe, turn on bell notifications, and all these articles are in the link in the description box below, so you can read through at your own due diligence. Check the monitors here. We're going to go right on into the market data for the day. Monitors going good on the audio. So, in the Dow Jones Industrial Average, we have Dow Jones Industrial Average is up 0.6%, almost 0.7%, or 6.7% exactly. Nasdaq Composite Index is down 0.8%. S&P 500 is down 0.24%. Global Dow Real Time is up 0.08%. Gold Continuous Contract is down 0.31%, and crude oil is down 2.56%. In the Europe markets, we have the FTSE 100 up 0.41%. The DX up 0.3%. CIC 40 is up 0.59%. FTSE MIB is up 0.16%. IBEX 35 is down 0.04%. The Stock 600 is up 0.55%. And the Swiss Market Index, SMI, is up 0.48%. In Asia market data, the Asia Dow is up 0.13%. Nikkei 225 is up 0.5%. Hang Seng is up 0.29%. Shanghai Composite is up 0.26%. S&P BSE Sensex is up 0.13%. FTSE Straits is down 0.38%. And S&P ASX 200 benchmark is up 0.74%. The Kospi index is up 0.61%. In the currencies market, the euro down 0.67%. Japanese yen up 0.56%. The British pound down 0.58%. Australia dollar is down 0.2%. The US dollar index is up 0.65%. The WSJ dollar index is up 0.43%. In the rates markets, the US 10-year Treasury up 0.072. Germany 10-year government bond is up 0.013. Italy 10-year government bond is up 0.059. Spain 10-year government bond is up 0.051. UK 10-year gilt is up 0.073. In Japan 10-year government bond is down 0.007. In the futures markets, again, we have crude oil down 2.52%. Gold continuous contract down 0.33%. E-mini Nasdaq 100 is down 0.9%. E-mini Dow continuous contract is up 0.63%. And E-mini S&P 500 futures is down 0.26%. And silver continuous contract is up 0.75%. All right, 4 articles to read from today. Cool stuff going on. China and the Fed to flood the world with trillions. Traders suddenly brace for extreme prediction. Bitcoin, Ethereum, XRP, and crypto price swings. From Forbes Digital Assets, Billy Bambro, reporter. Bitcoin, how do I stop this? Bitcoin and cryptocurrencies priced into, including major coins Ethereum and XRP, have surged this year with a surprise crypto-based AI plan from Ethereum founder Vitalik Buterin potentially opening up a new avenue this week. You can read through that. Again, all these descriptions, all these articles are in the description box below on this stream, this video. The Bitcoin price has more than doubled over the last 12 months as the market gears up for Wall Street earthquake that some expect to turbocharge the Bitcoin, Ethereum, XRP, and crypto market. Now, as rumors fly around, Bitcoin's worst kept secret, legendary Bitcoin and crypto trader Arthur Hayes has predicted China is about to flood the world with yuan credit, something he thinks will flow into hard monetary assets like Bitcoin. So the yuan credit, that's their own cryptocurrency. Bitcoin's historical halving that expected to cause crypto price chaos is just around the corner. That's in 2024. So that means block mining rewards are going to be split in half. So at the rate right now, mining Bitcoin now in 2023 will be mined out in the next 3 to 4 years. But because of the halving in 2024, it's going to cut the rewards in half and cause Bitcoin mining mineable supply to 21 million to reach that in another 130 years. So the block rewards are going to be less. If China's is printing yuan, it will make its way into the global markets and support the prices of all types of risk assets. Hayes, who co-founded crypto derivatives pioneer BitMEX, wrote in a blog post adding China is about to throw gasoline on the raging fire that is the incipient crypto bull market and flood the world with the yuan credit. Hayes, now chief investment officer in an investment fund, Maelstrom, pointed to rising expectations, the Federal Reserve will soon begin unwinding its tight monetary policy, leading the U.S. dollar to the U.S. dollar weakening and allowing China to engage in a massive round of stimulus that will revive its property market and increase infrastructure spending. I mean, what's the U.S. government going to do? Roll out their own cryptocurrency at that time? It's only speculative, but recent data has shown a brief rebound in China's struggling economy has stalled, piling pressure on China's President Xi Jinping to spur growth with stimulus measures. Given that the dollar is the world's largest funding currency, if the price of credit falls, all fixed supply assets like Bitcoin and gold will rise in dollar fiat price terms, Hayes wrote. The great part about this macro pillar of bullishness is that it doesn't require Chinese firms and wealthy individuals to buy any Bitcoin. The fungible nature of global fiat credit will dictate that the marginal fiat dollar will flow into hard monetary assets like Bitcoin. Meanwhile, an increase in the circulating supply of stablecoins for the first time over a year would have a similar effect on Bitcoin, Ethereum, XRP, and other cryptocurrencies to central bank money printing. The number of stablecoins has fallen consistently since May 2022, dropping by over 30%. November is set to be the first over 18 months that has seen an increase in stablecoins with an increase of 3.4%. And increasing the amount of virtual money in the system can result in the same thing as the central bank money printing for the financial system. Drozd, market analyst at Konotoxia, said in emailed comments, the stablecoin market capitalization dropped from around 200 billion in May 2022 to just over 120 billion at the beginning of this month, according to DeFi Llama data that shows an increase through November. The previous lack of new cash to spend could lead to a shortage of funds available for new investment, Drozd added. This, in turn, may have caused the market to weaken significantly, as manifested by reduced trading volumes in cryptocurrency exchanges. The current rebound may mark the first influx of new funds into the market in 1.5 years. 1.5 years. So what's your take on that? Let me know in the comments below. 4. China and the Fed to flood the world with trillions. Traders suddenly brace for extreme prediction. Bitcoin, Ethereum, XRP, and crypto's price springs. A lot of people are saying the bull market's going to bring in at the next halving. What I've seen is typically like the next halving, the bull market and Bitcoin surges doesn't really happen until like around 1 to 2 years thereafter, while slowly, steadily growth during those halvings occur. But again, we saw Bitcoin go way up and then drop back way down, almost to like its prior halvings, without even having to have a reduction after halving. I think it was just on the bullish nature of the surge of Bitcoin during the COVID era and the fact that people took their profits off the table during that time. Let's see, CoinDesk policy market from Nicolesh Day, writer-reporter for CoinDesk. A crypto mixer sanctioned by U.S. Treasury for North Korea allegations as FBI, Dutch, and Finnish police seized the website. U.S. Treasury Department has blocked a crypto mixing service from Global Dollar financial system on allegations it supported transactions tied to North Korea's infamous hacking group. Sinbad's website was also seized by the FBI, Dutch Financial Intelligence and Investigation Service, FIOD, Open Bar Ministry, Netherlands Public Prosecutor Office, and Finnish National Bureau of Investigation. A Treasury press release described Sinbad as a virtual currency mixer that serves as a key money laundering tool of OFAC designated Lazarus Group, a state-sponsored cyber hacking group of the Democratic People's Republic of Korea. And Treasury Office of Foreign Asset Control or OFAC designated 2 Bitcoin addresses and 2 email addresses tied to Sinbad, banning all U.S. persons from and anyone who transacts with the global financial system from interacting with the addresses in the future. According to a blockchain.com block explorer, one address currently holds around 0.35 BTC, around $13,000 at the moment, but has received a hair over 15 BTC worth around $570,000 at current prices overall. The other addresses designated an alternate holds around $67 worth of Bitcoin. Sinbad processed funds from the hacks of Horizon Bridge and Axie Infinity. The release said it also moved funds tied to sanctions evasion, drug trafficking, and the purchase of child exploitation, abuse materials, and additional illicit sales on darknet marketplaces. Sinbad is a relatively young mixer, crypto analytics service Chain Analysis said, which began advertising in October 2022. So if anyone's wondering what a mixer, a crypto mixer is, it's something that basically hackers and fraudsters and scammers and criminals use to put their funds into the like Ethereum or Bitcoin into this mixer, and it mixes it into a whole different maybe like addresses or crypto types like Monero or something like that. So it's a nightmare. It's a nightmare for projects. It's a nightmare for the industry. So I mean, it only makes sense to seize these kind of things and take them down. A fellow analytics service Elliptic claim Sinbad was also used to move some of the $35 million stolen from Atomic Wallet earlier this year. And the Treasury Department sanctions watchdog has previously designated Tornado Cash. So Tornado Cash has been like the long-standing one that I've heard of over the years, on and on and on, that scammers use and criminals use to hide and extradite their funds nefariously. Tornado Cash and other mixers are being used as bad actors for allowing. Designated Tornado Cash and other mixers as being bad actors for allowing illicit activity. Tornado Cash in particular saw similar North Korea allegations when OFAC sanctioned it last year. The U.S. Department of Justice spokesperson referred CoinDesk to the FBI when asked for comment. The FBI did not immediately return an email. Yeah, so there's other stories surrounding around this. So that's crypto mixer sanctioned by U.S. Treasury of North Korea allegations as FBI, Dutch, and Finnish police seized the website for the better good. Keep going here. Might have to cut the stream. I got 15 more minutes until I got to go into a business meeting. But let's see. Finance of CoinDesk. Blockchain messaging platform Wormhole raises $225 million at $2.5 billion valuation. This is from Jamie Crawley, writer reporter for CoinDesk. Wormhole, which was recently separated from parent Jump Trading Group after it scaled back its crypto operations, is a developer platform which allows different blockchain networks to communicate with each other. I'm not gonna. I might skip around in this article a little bit. Actually, it's not too long. We'll go through it. Wormhole, a developer platform that allows different blockchain networks to communicate with each other, has raised $225 million at 2.5 valuation, $2.5 billion valuation, and funding round reminiscent to the peak of the last crypto bull run. The funding round included a contribution from Wormhole's former overseers Jump Trading and Brevin Howard, Coinbase Ventures, and Multicoin Capital among the backers. Wormhole also unveiled Wormhole Labs as a core contributor to the platform and will specialize in products and tools to help expand cross-chain activity and development. According to an email announced on Wednesday, Wormhole was recently separated from parent Jump Trading Group after it scaled back its crypto operations. Jump was also said to have lost nearly $300 million in the collapse of FTX, according to author Michael Lewis's book about the debacle going infinite. High-ranking Wormhole employees, including a CEO and COO, left Jump earlier this month to run the platform as a separate entity. There have only been a few companies that were able to raise funding at such valuation after prolonged crypto bear market. Most recently, crypto exchange blockchain.com and blockchain infrastructure provider Layer Zero Labs were among those who raised funds with more than $1 billion of valuation. So that's the blockchain messaging platform Wormhole raises $225 million at $2.5 billion valuation. U.S. News. Cristiano Ronaldo faces $1 billion class action lawsuit after promoting for Binance NFTs. Portuguese soccer star Cristiano Ronaldo has been hit with a $1 billion class action lawsuit over his role in promoting cryptocurrency-related non-fungible tokens, or NFTs, issued by the beleaguered cryptocurrency exchange Binance. This is by Associated Press for U.S. News. New York Portuguese soccer star Cristiano Ronaldo. Has been hit with class action lawsuits seeking at least $1 billion in damages for his role in promoting cryptocurrency-related non-fungible tokens, or NFTs, issued by the beleaguered cryptocurrency exchange Binance. The lawsuit, filed in federal court in the Southern District of Florida Monday, alleges that Ronaldo's promotion of Binance was deceptive and unlawful. Binance's partnership with high-profile figures like Ronaldo, the plaintiffs claim, led them into costly and unsafe investments. I can't even use Binance NFT, so without like a VPN or something. So I don't know, like, people can't use Binance Binance NFT in the United States, from what I've seen. At least without a VPN, and I don't dabble with using the markets when it's blocked in the United States by cutting corners with the VPNs and crap. Evidence now reveals that Binance's fraud was only able to reach such heights through the offer and sale of unregistered securities with the willing help and assistance of some of the wealthiest, powerful, and recognized organizations and celebrities across the globe. Just like defendant Ronaldo, the suit reads, Representatives for Ronaldo declined to comment Thursday. Binance, the world's largest cryptocurrency exchange, did not immediately return requests for a statement from the Associated Press. Ronaldo launched his inaugural NFT CR7 collection with Binance in November of last year, ahead of the 2022 World Cup. The NFTs, which had starting prices ranging from the equivalent of around $77 to $10,000, featured 7 animated statues depicting Ronaldo from iconic moments of his life, from bicycle kick goals to his childhood in Portugal. Monday's suit said that the promotional efforts of Ronaldo's Binance partnership were incredibly successful, alleging a 500% increase on online searches using the keyword Binance. After the soccer star's NFTs were announced, the collection's premium level NFTs sold out within the first week. The suit claims Ronaldo has since continued to promote Binance on his official website and social media platforms, most recently on X, the platform formerly known as Twitter. Ronaldo's reposted a Binance video and wrote that he was cooking something up with the crypto exchange on Tuesday. NFTs are ordinary digital images with an attached version number that has been added to a cryptocurrency blockchain, a process designed to make them unique collectibles. NFTs enjoyed a brief boom, but has since largely collapsed in value as the crypto industry has been marred by scandals and market meltdowns. Over the summer, Binance was accused of operating an unregistered securities exchange and violating a slew of U.S. securities laws in lawsuit from regulators. The crypto exchange agreed last week to pay a roughly $4 billion settlement, and its founder, Changpeng Zhao, stepped down as CEO and pleaded guilty to a felony related to his failure to prevent money laundering on the platform. This week's lawsuit against Ronaldo isn't the first time that a celebrity has been faced litigation over crypto promotions. Last year, a host of Hollywood and sports stars, including Larry David and Tom Brady, were named as defendants in a class action lawsuit against FTX, which was the second largest crypto exchange before it collapsed in November 2022. The suit argued that the celebrity's status made them culpable for promoting FTX's failed business model. Ronaldo is one of the most recognizable and wealthiest athletes in the world. He leads his home country Portugal's national team, has played for the Spanish team Real Madrid, the Italian club Juventus, and Manchester United, England. He now plays for the Saudi Arabian professional team Al Nassr. And yeah, so let me know your comments on that. I actually, just from using the social media platform X, formerly Twitter, had just passively seen, these sort of things being put out there in ads or, in passing from what the algorithm wants to show someone who's, looking at NFTs or Bitcoin or tech and stuff like that, or even like finance and stocks. So, and now, obviously, most definitely, people who are following him in soccer, football, would probably have seen them as well on the social media platform, because that's just how the algorithm works on social media platforms, to see something like that. And maybe got people to, look into it and invest their funds into it somehow. Anyways, PC Gamer, there's still hope for the future of this 42-year-old RPG series. Despite its brush with NFTs, the iconic wizardry game may still return in a more faithful norm. The name Wizardry still carries weight, which is probably why the recent announcement of Eternal Crypt Wizardry BC, a blockchain-based clicker game and an NFT platform, went down like a lead balloon. A sad side of the times, perhaps, but a good excuse to talk with Roberts and Norman Surotech, the brothers behind Surotech, publisher of the most influential RPGs in the 1980s. I mean, I will say this. Gamers' learning curve to go into a blockchain game is like way over everyone's head. They don't want to spend all that time to get a cryptocurrency wallet, do this and that. So there's still tooling being built out, like Magic Eden's recent cross-chain NFT wallet. So things like that to make it easier for users to actually adapt and play NFT-based games. Otherwise, right now, it's still a huge learning curve for people, and they just don't have the attention. They just want to jump in, plug the game in, and play. Anyways, it's hard to imagine a world without Wizardry, the first game proving grounds of Mad Overlord, released in 1981 for Apple II before being ported to almost every platform of its era, and is one of the key foundational works of the medium. Even in its original form, it's intuitive, accessible to anyone who's played a dungeon crawler, immediately familiar. Wizardry has players, close this out. I may have to cut this stream out, but we'll see here. Yeah, let me skip through this because I want to see what it says actually. Again, you can read through these articles on your own, but I want to see what the, while there was an evil wizard lurking at the bottom of the feet, the RPG grind for XP, gold, and gear was the core appeal. Wizardry pioneered a lot of what's now standard in both Western and Japanese RPGs. And let's see, I want to see where it says about the NFT parts. What defined Wizardry for most, instead aside from peers at the time, quoted digital and antiquarian on the series. Yeah, it's antique, RPG. Um, AC2 for a lot of the credit. I'm still not like seeing like I want to see like what it says specifically. It's gonna give it like why it's like came in to make a return, but I want to see if there was like anything in specific that stated what was the NFT side of it, why it kind of tanked like that, and how it's making a comeback from there. Um, yeah. So here, a Japanese company called Dreadcom bought the IP in 2020, bringing us to the blockchain proposition that went over about as well as curdled milk chugging contest. But there is still some hope for Wizardry future, or maybe more accurately, its past. The Serotex still has the license for the first 5 games, and there are plans in motion to use it. At the very least, it sounds like they'll be going in a different direction than Dreadcom. What I can do is probably look more into it. Let's see. Yeah, it doesn't really say specifically. What I'm basically saying on my, you know, um, opinion, basically on my opinionated take on it, is that just the learning curve and people's like attention span to like really like adopt playing this to earn NFT or earn a basically on-chain like token, probably just was like so stagnant and out the window that it didn't succeed and it just tanked again, like I said, like a lead balloon. A lot of it is like the learning curve of adopting a cryptocurrency wallet, whether it's browser based, whether it was mobile, things like that, that still, caused that to happen. So there's still hope for the future of this 42-year-old RPG series, despite its brush with NFTs of the iconic Wizardry games. So that's that. I'm going to keep going on that. But yeah, look more into it. Do your own research and see what it says of why exactly, the NFTs didn't really pan out for it. This is from The Verge. It's not electricity. It's not just electricity. Bitcoin mines burn through a lot of water as well. This is some tech news here, about Bitcoin. Bitcoin mines aren't just energy hungry. It turns out they're thirsty too. The water consumption tied to a single Bitcoin transaction on average could be enough to fill a small backyard pool. According to a new analysis, Bitcoin mines are essentially big data centers which have become notorious for how much electricity and water they use. Bitcoin's water footprint is growing, according to the analysis published today in a commentary in the journal Cell Reports Sustainability. That's an issue to watch as the price of Bitcoin recovers from a spiraling crypto winter. Let me see. Does it say who wrote this? By Justine Kalma, writer reporter for The Verge. The study was conducted by Alex de Vries, or a PhD candidate at Vrije Universiteit in Amsterdam, whose previous research has tracked cryptocurrencies, electric consumption, and greenhouse gas emissions. Those issues have moved legislators to push for more oversight of crypto mines and environmental impacts, but until recently, most of the attention has been on whether energy-intensive cryptocurrencies like Bitcoin might throw off climate goals. So, basically, let's see in specific what it says here. An analysis estimated the direct water usage from Bitcoin mines cooling systems. He also added their indirect water consumption associated with electricity generation, since power plants also use water in cooling systems. All in all, he found that cryptocurrency mining uses about 1,600 gigaliters of water in 2020. That's this amount of water in 2021 when the Bitcoin price peaked at over 65,000. That comes out to a small swimming pool's worth of water on average for each transaction. It's about 6.2 million times more water than a credit card swipe, according to De Vries. So this is the problem, still in these industries is like, a credit card swipe in a digital finance system is, not environmentally impacting things like Bitcoin water consumption here. So when we look into like alternative sustainable energies like solar, that's something, an alternative renewable energy source for Bitcoin mining. That's really what needs to happen here instead of water, consumption, especially when there's, so many places that need water desperately. This does not help Bitcoin become bullish on people who want to invest in Bitcoin when it's screwing the world up. But that's not to say that Bitcoin is not being mined in energy efficient ways. I'm just saying it needs to port over into all sort of renewable energy ways by not, having this happen. 1,600 gigaliters of water in 2021 when Bitcoin price peaked over 65,000. So what's going to happen, like, when, Bitcoin's being mined out to 21 million after next halving and it goes up to $100,000 like people are saying, and to $1 million like people are saying on over the years. I mean, what are you going to drain like the, oceans to keep mining Bitcoin? So, of course, everything dipped in 2022 as the price of Bitcoin plunged and mining slowed, but the price has climbed back up since last year, rising from less than 20,000 to around 38,000 as of today. The higher the price, the more incentive there is to ramp up mining. And that obviously, again, is using more energy intensive methods. And that's why DeVries expects that cryptocurrency water consumption will rise to a new high of 2,300 gigaliters worldwide this year. In the US, the biggest hub for Bitcoin mining in the world, Bitcoin mining uses as much annually as a city the size of Washington, D.C. So yeah, it's not helping these issues. There's another way to get the cryptocurrencies to use a fraction of water and electricity. If it eats up now and slash greenhouse gases emissions, get rid of the mining process altogether and find a new way to validate transactions. Just like Ethereum went from POW to proof of stake. So Bitcoin is still POW, proof of work right now. It says that's why the biggest cryptocurrency network Ethereum accomplished last year. And that took them actually not just last year. It took them like 4 years. We were expecting this in like 2018, 2019, the talk of this was going to roll out. And then even after that, it took like, ongoing 3 years to like recently to get Ethereum over into proof of work. All right. Yeah. I'm going to go and let's go. I'm going to just read the finance real quick here. We're going to skim it. I'm going to cut this. I got 2 articles that can circle through back around on how NFTs can transform daily life, and 5 online courses for metaverse enthusiasts. I'll read those articles as tomorrow on the stream, or maybe a little later today. We'll see. U.S. stocks were mixed on Thursday morning on a track of the best month this year as investors continue to bet on interest rate cuts after a key reading of consumer inflation. Dow Jones Industrial Average pace gains, which jump about 0.8% or about 275 points, while the S&P 500 slipped 0.1%. The tech-heavy Nasdaq Composite Index fell 0.6%. Stock gauges headed into the last day of November trading with fresh 2023 closing highs within reach. This comes after a monster rally powered by optimism that the Federal Reserve is done with hiking interest rates. This is nothing really different than what I was kind of going through yesterday in this. Stocks were buoyed by Thursday's release of the PSE index, the Fed's preferred inflation measures, which came in line with expectations. The print could add more fuel to the notion that the Fed is done with hiking this cycle and may cut rates sooner than thought. So yeah, stock market news today. U.S. stock splits as the Fed's favored inflation gauge cools. That's all I got today. Again, if you're on the YouTube side, please do subscribe, turn on the bell notifications right here to Blockchain Tech and Finance. And let me know your comments in there and what you think is important, and I'll cover it right here. Cheers. Ciao. Peace be with you. Have a great and safe day.